On 40, let's talk about commodities as a pack. Remember, we were discussing oil prices. Oil prices are higher, stock markets are lower. But what is the one commodity which is usually higher at a time of geopolitical stress? It is gold prices. Gold futures are up about 1.25% as we speak. My colleague Manisha has more. Manisha.
Thank you so much for that, Prashant. Well, yes, it's not just the crude oil prices reacting to the Iran news. It is also the gold prices where we have seen a lot of safe haven buying coming in. So $1540 per ounce is back on your screens. It is a one-month highs. We have seen strong gains in the previous year as well. And 2020 has begun with a bang when it comes to the gold prices. The rally in equity also has led to some diversification coming in for gold. We have seen the fund buying come in. There also are money managers vouching for gold prices to gain for this year and the next as well. And of course, the rising tensions in the Middle East have seemed to be doing that trick. So we already are up by nearly 2% in the last 3 trading sessions in case of the gold prices there. But we also are talking about the buying in the Indian markets. Remember, the last year hasn't been so great when it comes to physical buying, but we definitely have seen the volumes go up on MCX, and the last couple of sessions will also show you that. Another instrument that MCX had launched was the gold petal contract. It's a 1-gram contract for the retail investors, and that seems to be doing quite well. Shivanshu Mehta is head of bullion at MCX, and he joins us on the show with all of that. Shivanshu, hi, a happy new year to you, and what a great number to start the new year with, where you have seen a record delivery of 3,000 coins in the December expiry, and this is a build-up of 2,000 coins that the exchange already delivered in the month of November. What really seems to be working, because there seemed to be a lot of interest, especially in this contract?
Thanks, Manisha. First of all, a very happy new year to you as well. Yes, while as the asset class itself comes back into favor internationally, it also makes it imperative for us as market leaders to continuously innovate and to bring products to the market which help in organized ways in which to invest and to also accumulate gold, at the very grassroots. So since we have a presence across 1,000 cities and we have around 28 lakh unique client codes who are active. So as a start, what you're seeing in the gold 1-gram contract is just a beginning. I'm sure strategically speaking, with all the positive regulatory changes coming in, including mutual funds based on commodity derivatives, etc. This can further leverage and can further serve the needs of the domestic investor. As you know, this is a product which has been kept fair and transparent in terms of the making charges being clearly articulated and separate from the traded price, and it is enabled with the commerce system that we have, which is the DMAT, and wherein people can actually hold it electronically, accumulate it, and if and when they desire, they can take delivery out of the exchange vaults. So I think, yes, overall, the bullion turnover also, like you rightly said, is reflecting the mood of the sentiment of the masses. We are at around 10,250 odd crores on a YTD basis as compared to 5,600 on the bullion turnover.
Well, absolutely, Shivanshu. When you look at MCX and with the kind of volumes that you've done, gold clearly is at the crux and core of it, because that is where the major volumes have continued to be on, and it has been a sticky point for you as well. But, I want to come back to the gold petal contract, because that is a new one for you. And as you were telling me earlier, that this is the deliverable exchange traded contract in the world with the kind of product that you've come out with. How do you look at it addressing as you said, it's an organized way of doing it, the gold asset accumulation? What is your sense on the kind of participation that we are seeing on this right now? You already have made huge numbers on this one. What is the way forward as we get into 2020? What can we expect from bullion on MCX this year?
That's right. Firstly, I think you worded it right. While we don't play for records, but yes, in essence, it is a global first that there is an exchange-traded 1-gram gold deliverable contract. So in that sense, yes, it is a first. And like you mentioned, the November series saw 2,000 coins being delivered, and that moved up to 3,000 coins in December, taking it to 5 kgs via 5,000 1-gram coins. That is where the numbers stand. The number of clients, of course, has also been increasing rapidly. overall in commodities and especially in bullion. And like I said, the SIP mode basically, futures bring more advantages to the table, even when you compare it with online platforms or OTC platforms, which are great. But here there is an added advantage of a liquid order book, the ease and convenience of hitting a button and being ensured of delivery at a certain date.
Sure.
And the making charges being separate from the price, as well as the electronic accumulation. So these are the cornerstones of this product as we designed it. And it seems to be catering to the market needs, as delivery actually shows acceptance from the sellers as well as the buyers.
Fair
both.
point. Yeah, Shivanshu, even as other exchanges have gold as a contract as well, but MCX clearly has been able to hold on to that leadership. So what part of bullion actually does contribute to the overall trading volumes or market share on MCX?
Yes, well, the market share at the bullion level has been over 99%, and individually in gold as well as silver, it has been over 99% on a YTD basis. Well, the volume contributors, we have actually an array of products in all denominations, and as you would know, with the regulatory mandate of making everything deliverable, they have all become deliverable now, including the silver mini and micro in the upcoming contracts. The contribution, basically, there are some B2B products like the gold kilobar, and there are certain B2C products like the gold 100 gram. So there is an active contribution from that front, as well as from the benchmark silver 30 kg contract, along with the silver mini and the silver micro. So these are all contracts which contribute in various ways to the volume. But the benchmark, which is also a domestic price reference point for the industry, is truly the gold kilo contract, along with the silver 30 kg contract.
So of all the gold futures that are traded in the Indian markets, 99% of that market share lies with MCX. So that clearly is a big one, Shivanshu. Thank you so much for joining us. And well, that's a new product out from MCX, which seems to have done quite well in the last couple of months.
Okay, all right, Manisha, thanks very much for that. For the market still under pressure, Zee Entertainment continues to be a top loser on the Nifty. It's lost over 6% on a week-to-date basis, so watch out for that. And Asian Paints follows suit on account of higher crude prices. That stock is down and out around 1 to 2%, almost 2% lower for Asian Paints at this point. We're going to take a break now, but here's something that our viewers must take note of. CNBC-TV18 and National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decisions with your money. Quite often, hard-earned money gets lost by uninformed investors because they dabble in penny stocks. So what are penny stocks? Penny stocks are the less researched stocks with little credible research on their fundamentals. Moreover, these can be manipulated by unscrupulous operators. So unless you have convincing reasons, you are better off investing in well-researched large cap, mid cap or small cap stocks. Don't get lured by the performance of these stocks without understanding their history. Never trust random, unverified sources that urge you to buy an unknown penny stock.